We're together again.
We are. Welcome
We are.
back. Great to see you, John.
Well, yeah, likewise. Good to see you, Jeremy and Jerry.
Good.
How's it
How's
going?
yeah, how's your week been? What have you been who you been talking to?
Well, a lot of exciting things have been happening. I can't comment on all of it, but anyone that follows the Reddit thread, I don't want to get into the drama of Wall Street Silver, but we were able to remove a negative threat and something on so that's the sort of the bad news or the good news. But we've had some great guests on, but no more important than Guildhall Wealth. This is my favorite time of the week because you guys are in a rhythm. And Jerry had a better idea than I had. Again, that's twice in a row now, Jerry. So there's your pickaxe right there. If you
Right.
deserve this hat, but your
Nice.
hair's. So what do you got for as a topic for today? I'm just going to have to wing it.
So the big thing this week has been the spreads. It's come to our attention that the spreads in Asia or prices in Asia are much higher than that in the US. This is in my mind, it's a continuation of what we saw over the last couple of years with higher premiums, where the physical world was saying, hey, listen, yeah, you can look at the spot price, and the spot price might say $20, but if you want real silver, it's going to cost you 24. And so now, Jerry, why don't you take over with what we're seeing in Asia, and I'll put the charts up.
What we're seeing is exactly what was anticipated years ago. There was a Russian finance minister who was quoted as, just before all the BRICS news, simply saying, we're responsible. The former Soviet Union is responsible for majority of the mining of gold and silver, over 60% less than, but yes, than less than 20%, 10%. The pricing is coming out of New York and London, which is responsible for a minute amount of activity in gold and silver. So rightfully so, things are shifting. It looks like things are shifting eastbound. Things are shifting eastbound. Further, it was just started off with de-dollarization, the alliance with the BRICS, and now they're focused on price, the pricing controls. And what we're seeing is a disparity of about 10% on silver right now. I think premiums or the price of silver in China is about $26.70 right now. The silver price here is at $23.20. That's almost 10%, and this is happening almost daily. The percentages are jumping, and in gold we're about 22.30 on gold, whereas we're about $100 cheaper here in North America. So it's a clear sign of arbitrage opportunities. Buy low here, sell over there, creating a vacuum. And this is one way of putting pressure on the very mechanisms of pricing control, the COMEX and the LME, the London bullion market. This is going to be, we don't know exactly how this is going to end or how this is going to play out. So it's very important and exciting to watch how things develop going forward.
It shows to me too how just lightly and arrogant and ethnocentric the West has treated this whole thing, starting with the idea that you would weaponize the dollar like they have, whether it's been Iran, Venezuela, recently it's been Russia, seizing someone else's assets. So basically, the diplomat you were referring to is Sergei Glasyov, who's the architect who basically engineered and devised the plan for the gold, gram of gold to a barrel of oil, and then later for 2 barrels of oil, which should double the price of gold in the East. And then, we weaponized the dollar. So now they're weaponizing in a sense or fighting back using the real thing, which is gold and silver. So, I have to say, some people put, flags in their yard saying who they stand with. And I'll say right now, I stand with China on this monetary policy.
Yeah, it's definitely, again, when you just think about premiums being higher in different places, it to me it signals potentially two things. One, that you have a clear difference between a market that's physical and a market that's paper based, and the paper based could be being manipulated lower. On the other hand, and this is something Jerry and I were discussing earlier today, is it could be them taking advantage of the manipulating of lower prices and saying, well, you know what? We will create an arbitrage opportunity to suck that physical product east. I think that might be, I think you have to leave all options on the table because we don't really know why there's that disparity. But physical demand is there. We just read an article in Zero Hedge about Japan. They're buying gold like crazy now because of inflation. So there's a need for physical gold, physical silver, and higher premiums make sense. And if you're dealing with a paper market versus a real market, then you're going to see these disparities.
Yeah, it's exactly
go ahead.
There's two markets, right? One is totally physical, which is the Shanghai, which is even the Indian Bullion Exchange with the amounts of silver that they imported over the past 2 years. There's no paper contracts, and that's the importance. The paper has been used over and over again to suppress the people and their investments in silver to keep prices low. When you create a contract of, one contract is 5,000 ounces, you do that over and over again, we have a problem here in North America. So yeah, definitely the arbitrage opportunity is going to accelerate the sucking effect, the vacuuming of precious metals flows, and ultimately lead to potential, what's going to happen. I remember when the silver squeeze happened, LBMA came out with a statement talking about how much they were panicking. If this continued for another 2 weeks, they would have ran out of silver. What's it like now? This is going to be another epic squeeze out of the COMEX. And there was a chart that we're going to be sharing momentarily about, there's nothing going into the COMEX. It's just we're just seeing.
Do you remember the story? This could have been 6 months ago, where in one of the vaults where they thought there was nickel, it was just like a bag of rocks.
Yeah, that was the nickel debacle. Part of it.
Say that 3 times. Nickel debacle. Yeah, I know.
Well, I wonder what that is. You think they figured, oh, well, we've got the regulators in our pocket. No one's ever going to find out. But they do find out. This is a good example here, Jerry, because it's showing withdrawals from what is this, COMEX? Or JP Morgan's vault?
JP Morgan vault.
Wait, you said the wrong word. It's the Crimex.
Yes.
Very, very much so. That's right.
So it's very clear again on this that they're losing product right now.
Yeah, Brinks, JP Morgan. This is over the last year. There's a lot of metals moving out. But the big names are leaving the COMEX in droves. Nothing going in the COMEX. Nothing going in North America. Business is shifting, and it's moving. It's moving where the demand is. Demand is in the east, and rightfully so. Merchants are moving. Pricing has to move eventually. I think that's the last caveat is the price in this new financial economic warfare.
So, John, let me ask you: do you think it really is a case of the rubber needing to hit the road? That like strategic oil reserves, once you've used them all up, that's it. Oil prices start going higher. Do you think this is a case of, listen, once all that product is gone, there's nowhere else for the price to go but up? Could it also be that there's entities trying to get it at lower prices, and then once they filled their coffers, they'll let the price go? Like, why not play into the game?
Yeah, there's two sides of that. That's a really good question. I would say that here's one pattern that I've seen emerge throughout maybe the last 70 years that I've looked at. Who are the largest purchasers of silver tend to be industrialists. So let's just take Elon Musk. He owns a rocket company, a solar company, an electric vehicle car company. So in all three of those cases, he's a very large user of silver. And any person who owns a factory, they want their factory inputs to be as low as possible, whether it's their raw materials or their labor. So there's always been sort of an incentive by the industrialists or the silver user to work with bankers to keep the price low, to keep their factory costs low. And it's not a matter of coincidence, but most of the big industrialists since the Industrial Revolution also sit on bank boards. So you could say that isn't really a conspiracy. as much as that's an intentional act, but you're going to lose control. That's what always happens with discovery. And China knows this. So does Sergei Glasiev. These guys are brilliant economists, and if I know it and you know it, they know it. So all they're doing is coming up with there's 4 types of wars. There's the kinetic war you see with guns and tanks and bombs and planes. Then there's the information war. The first casualty of war is always the truth. Then there's cyber wars, but financial wars are the most powerful. So that's all that's happening here is China, Russia, Brazil, India, now the Saudis. And once we lost our oil peg, they're just beating our ass with these financial wars because we've been flexing our muscles with the largest military planet Earth has ever had to endure. That's my read.
Yeah, and it's certainly in that sense what's been an interesting trend. I would say it's something you definitely want to take note of is that countries that are looking to get away from the US dollar in the past would feel the wrath of the US military. Not so much these days. It seems that there's power in numbers, perhaps. But, you're talking about businesses using the metal. I seem to recall, actually, that in 1980, a lot of the companies didn't really worry about the price of the metal going sky high because they actually had stockpiles. Versus today, they buy as they require. They're not stockpiling. Right.
That's correct.
You don't stockpile anymore. So you buy on demand. And now I understand that a lot of them are actually circumventing going through, not that the COMEX is a delivery mechanism, but that they're just basically going direct to the mines to get the physical product, which I think maybe that's a way to circumvent prices rising. Maybe. Yeah. I don't know.
There are 1 or 2 mines that have tried to engage directly, but usually the miner's job is to, whether they have what's called the dory bar, or they have what's I'll think of the term in a second, the composite that they usually sell to a metals broker. So I'm not sure if there has been a few cases where you'll see that in the developing world. I'm not sure if that's true in the US or Canada.
Oh, I see what you're saying. So in other words, there is a process of hands.
Yeah, there is. There's definitely. And they usually hedge along the way.
Right.
Because there can be, first of all, it takes about 10 years for a mine to come online, and most of them don't make it to producing the finished goods. So at that point, it goes to a broker, and then the broker, it would be interesting to follow the whole discovery, and it's different in each jurisdiction. Canada is considered a tier 1 jurisdiction, along with Australia, United States, Norway, Finland, I think Chile and Peru.
Yeah, and so I think I see what you're saying. You're in a way, if you try to cut out some middlemen, you're going to have a tough time doing business.
Right. You may get away with it once.
Yeah. You might even have the bank decide they don't want your business anymore.
Right.
Yeah.
You can't get too creative. It's not like selling, digital media or something. You can, the point is, if China is 10% higher and that disparity accelerates like Jerry's predicted, and we've been kind of watching there was a lot of people just in the Twitter sphere that said this will happen. Big names like, we're looking at the Oriental Ghost, and he may have a code name, but even, really good analysts like Vince Lancy, he's been calling this forever, and Zoltan Posar of Swiss Bank. So this is something that people could see this coming as soon as the war started. It was that quick. And it's not just with silver and gold. We're seeing it with other commodities too. Biden could get away with releasing the Strategic Petroleum Reserve for the midterm election of 2022, but it's not going to work with silver because U.S. has already shot its wad and released or drained our strategic stockpile. And unfortunately, or this is fortunate for silver, there is no other metal that you can substitute for the solar panels. You can't use copper.
Yeah.
You can't, same with all the weaponry. Silver is still the best conductor of electricity, that and gold. They're not going to spend the 80 times more it costs, or whatever the gold to silver ratio is. Maybe it's 76 now. So why would they do that? They're just going to use silver. And with this transition to net zero, it, like it or not, it's happening. Will they phase out the internal combustion engine? No.
Oh, could you imagine? You mentioned Tesla, and then you mentioned the combustible engine. So I got to get your opinion on this. Could you imagine what happens? Like, I have no problem with anyone who buys a Tesla or electric vehicle, but there's a certain amount of virtue signaling that's going to come in play, right? Oh, I'm saving on gas, but I'm doing my part for the planet. Doesn't matter that it's the same equivalent as having 12 refrigerators in your garage, because that's what the energy cost is off the grid. But could you imagine? We've seen it in California where they start telling you to stop charging your car.
Well,
and you're sitting there saying, but I did my part. I did my part. And now you're telling me I can't. They got you. This is the whole point. They have you. You're falling into their hands.
Well, yeah, they can also turn off the power grid and you can't drive, right?
Yeah.
It's the same reason I would never buy Bitcoin, because why would you store your money, first of all computers have a built-in obsolescence. We don't want to get into that. 2 weeks ago, we got into that discussion. It's a rabbit hole. But yeah, you don't want to be dependent. There's a war on gas appliances in the United States right now.
Right.
And that fits the same pattern or you would call it the dilemma that you just brought up, right? That all of a sudden now you're dependent on the grid. That's why you see companies out there like Ford Patriots, and I forgot the second one, where they're selling a bunch of products so you can, if you had to live off grid, you could. Mm-hmm. Speaking of Elon, he also has Starlink internet. I wonder how much silver is in a satellite. I'd imagine quite a bit. Yeah. And we ran the story last week at the pickaxe.substack.com on one product that used 5 tons of silver. Now they're not going to make that many of them, but it's just one product, and it's the shield that's used in nuclear fusion technology for power generation. 5 tons of silver. So
when you think about usages, and Vince Lancy did a show about that probably about a month and a half ago, talking about Toyota's come up with a new battery.
That's right.
I actually was more intrigued with the concept of putting it into windshields to heat them up. Yesterday at the office, we decided, hey, let's take a couple ice cubes, put one on the desk, one onto a piece of stone, and one onto some silver. And the ice melted so fast on the silver because it conducts electric heat so well. You're thinking, how come this isn't in windshield? This would be amazing in a Canadian winter to have that. And I'm sure it's coming at some point. But
Silver Institute just published something last week showing the huge spike in a silver coated commercial window application to save on HVAC. So you just go to their website, Silver Institute. Yeah. So it's similar to what you're talking about, but if you think of all the glass that's out there, it's probably a third auto, a third residential, and a third commercial, I would guess.
So have you do you follow Bixweir at all? A little bit?
I've heard of him, but I honestly can't get through his videos that well. I'm not saying not, only because there's just so much, the music sucks. That's my problem with him. But I think he's a bright guy, and he's done some great research on Bank of America. Tell me what you learned. And I know he has a massive following, so I should just shut up,
Well, I know he, with all his research and whatnot, he's got a lot of pretty high predictions for silver, and I thought I'd run them past you.
Yeah, do it. I know he believes in a 1-to-1 ratio, so go for it.
And you know, we've heard that also from people like Mike Maloney, another very smart person in the business.
He's the best.
You know, I think Mike Maloney was one of the first books I ever read too on the subject. Great, easy read. And he talks about the ratio going the other way, actually going past 16-to-1. So down past 1-to-1. So with those type of numbers, though, you're looking at silver potentially into the thousands. Do you foresee?
Now I like VIX.
Yeah. Music's great.
Yeah. The music is great.
The music's great.
I like this genre much better.
Yeah. Well, hey, listen, you know, look, you often have people on your interviews that you may have disagreed with once or twice in the past. So good on you there. But no, he thinks that it could go to thousands. He thinks it could go to thousands. Now, there's some, I'd love to get your opinion on this. There's some that would say, in sort of be careful what you wish for kind of way, that, well, you don't want to see a world where silver's 5,000. And I think yes, but what are your thoughts? Do you think silver could go into the thousands, and do you think the world looks okay at that price?
Wow, you're putting me on the spot. First of all, we'd all like to see that that we were right about something. Okay, because I haven't met an avid stacker, and usually, you know, the Wall Street Silver and the Silver Degen Club, between the two, that we're looking at, you know, 250 plus, you know, 260,000 plus people. Now, not all of them are activists that have gone down the rabbit holes we have, but it's sort of a lifestyle. And I hate the word cult, so I'll have to think of another. But we have a paradigm, a worldview that we share. So if we're that many people, and you just put up a chart by one of our thought leaders, is Ditch the Deep State, who's also named Michael Lynch. He's a petroleum engineer. So these aren't just whack jobs that, you know, like Bull Pony. Do you know who that is?
Yes.
Yeah, I mean, he's kind of, I mean, come on.
It's tough when you put your neck out on the line all the time. You know, it's tough. It's hard to keep putting your neck out on the line. And same thing with numerology and dates. It's tough. It's hard.
It's pretty hard to think of anyone out there that's smarter than Doug Casey.
Yeah.
Or, you know, just from someone that knows everything since the first coin was minted from the mines of Lorient near, you know, during the Peloponnesian War, and he'll tell you every emperor and what the debasement was, and follow, you know, so guys like that. That's what I keep thinking is, look at the people on our team. We got Jim Rickards. You mentioned Mike Maloney, Doug Casey, guys like Rick Rule, and you can go on forever and ever. And I thought to myself, but who does the people that have the dollar on their side? It's usually some idiot like Dave Ramsey or Harry Dent that's calling for $500 gold when the cost of production is 3 times that. Who would ever make a call like and then Kitco feels like they got to trot out this really, you know, imbecile, and they do it. Or Brent Johnson, who talks about his milkshake theory. He's just a low functioning human being that, you know, I think he's paid by the US government to espouse these ridiculous theories. Why would you ever have any sort of allegiance to a Federal Reserve note? And when you know that every fiat currency has crashed to zero, you know, but look at the intellectuals that are on our side. They're usually engineers, you know, they're usually historians. They don't have one on their team that makes any sense that I can think of. At least Keynesian people, every now and then there is something to their argument when it comes to the expansion of credit. Go ahead.
Sorry to interrupt you. I can't tell you how much I appreciate that answer. That is probably the best answer I've ever heard to a price prediction, because what your answer tells me is, look at the smart people who are telling you that this is going higher, and it doesn't matter if they're telling you it's going to $50 or $100. They're giving you the big picture, and you can compare the intelligence of our team versus their team, and you decide where it's going to go.
Yeah,
It's
go ahead.
great.
You make the decision.
Yeah.
So it'd be almost like a debate club, or they
Yeah.
used to have like Upper St. Clair Panthers versus the Mount Lebanon, two high schools. And you go, well, which one are you going to send your kid to? The
Well,
one, that's how I look at it.
and I have to applaud you. Way to not commit. Way to not commit to the answer.
Thank you.
You're welcome. Jerry, what about you?
Sorry, I'm good at dodging things, but go ahead.
No, I think that's great. I think that, you think about, we've been talking about a drawdown in physical supplies, moving the physical east. Obviously, there's a need for it during inflation. I think everything is leading in those directions. And then look to the smarter people in the room. Not you're the smartest one in the room right now, but the smartest people in the room, and they're telling you where these things are headed. So I'm going to put you on the spot again. I have another question for you. I think a lot of people who do own physical metals, we can't help but think short term. I remember buying my first ounce, and I wanted the price to go up so bad that minute, and of course it went down $40. And I think pretty much every time I've purchased, it's probably dropped. I think I'm getting a little bit better in my patience now, but there you go. What do you think is behind the lag of the metals not showing up to inflation? I think it predicted it, but what do you think? Do you think?
Well, actually, I would say that let's just take year ending 2022.
Okay.
Silver, everybody was complaining that silver and gold had done nothing. But just go look at what happened. This is 2023, so we can only look back year ending 2022. Silver and gold stayed flat. Okay? Flat.
Yeah.
That means, okay, so it chopped sideways for a year. Meanwhile, in the United States, we have what's called the S&P 500 that's held up by the Magnificent Seven, which is Tesla, NVIDIA, Alphabet, Meta, Amazon, whatever. They were down on the average about 35 to, and in the case of Meta, 65%. So silver did 60% better than Facebook, 40% better than Tesla, 25% better than Google. It smoked everybody. Okay. What if 7 stocks hold up the S&P 500? It would be like joining a choir with 500 people and only 7 can sing. Or in the NFL, there's 500 players, but only 7 could play football. This is a joke. They call that breadth of the market or depth. We have none. You have no alternatives. So if you can't go to the S&P 500, where do you go? You can't go to bonds right now because of the threat of inflation and default. Real estate is risky in the US and Canada because the rates are going to get higher. You have I hate to say it, but where else are you going to go? And then go to silverprice.org or goldprice.org and just do a 20-year shot.
I'm showing it right now.
Oh, okay.
I was ahead of you on that. Yeah, I think it's interesting to think about that dynamic where you had almost a decade of zero interest rates and people had no choice but to chase yield. Now interest rates are rising, and I was listening to John Williams from Shadow Stats. He had an interview this week with David Lynn, and the numbers are staggering. The real numbers are staggering, and so you can't sit there and get 4%, 5% on your money. That's not beating inflation now that it's up at 15%. It's basically no different. The only difference is where are you going to go chase yield now? You want to go chase yield, Jerry, you were talking about it today. What do you want to go chase yield for auto? Right? People can't afford the new leases. They're not going to be buying as many cars, and the workers are going on strike because they want more money. So gas prices are up. It's going to cost you more to buy a car. That means less cars are going to be sold. And by the way, the workers want more money, right? So What are you going to go speculate in that market? And how different is that going to be from any good goods market, right? And where anything is being produced. And then when you look at real estate, you say, okay, wait a minute. It was easy to lend out cheap money. Now the cheap money's gone. I can tell you this, John. I was looking at the real estate listings in Toronto. Talk about a lag. You know, no disrespect to anyone in the real estate market, but the prices, it's as though people have not yet admitted what's happened. The prices are still so high, and you're sitting there saying,
I hate that word starter home, but it's a word we all know what they mean.
Okay, a studio apartment, okay, in a fixer-upper studio apartment is in the not downtown, maybe just outside the downtown core. You're looking at close to 700,000 for a 1-bedroom apartment. If you want a two bedroom apartment in the city, you're into 1.6.
What's a single detached in a suburb?
You're in the suburb, you're looking at $2 million. And you could be fixing that up. Now the question is
what was the price?
2 million.
Oh, geez.
Maybe 1.8 when you have to fix it up, right? So you're going to still have to put in 2 or 3. The numbers are pretty crazy.
They're even higher in Vancouver, aren't they?
Who can get the mortgages on them now, right?
Yeah.
Because the banks aren't going to do them. And the banks, and you know what's going on with the banks? I'll tell you what's happening. For about a minute, everyone was trying to re-amortize. And the banks were helping out. So they would say, well, let's amortize you out 50 years. How about that? Just to keep you in your home. I mean, I can't say that that's for sure. Do your research. But I do know that the government is now coming up to the lawyers and the banks and saying, what are you doing to stop this situation? We can't have you amortize out 50 years. We can't have you amortize out 40. Tell you what, we'll give you 5. So you don't have to amortize out. We'll let you go from 30 to 35. But you guys have to start coming up with some real solutions. So somehow it's the bank's problem, not the government problem, even though the government started it by lowering interest rates.
They're going to require people to have more skin in the game and require a larger down payment.
Right. So if you have to come up with a larger down payment, then how much of your income is supposed to be going to housing? Have you seen that? I know Jerry's seen it. Have you seen this animated chart that's been going around about income versus housing costs?
No, but let's just say it used to be 3 to 1. You take your annual income times 3, and that could be what you qualify for.
Yeah.
What is based on what you just said about a $2 million home in a typical suburb? That's now what are we saying, that people are making what's 2 million divided by 3? No one there's making 700 grand a year, your average worker.
No, even if you have two wage earners or 2 income earners, that's still 350 each.
Mm-hmm. Yeah, that's what I'm saying. So now the ratio is
like about 10 to 1.
It's like China got really dangerous at 9 to 1. Yeah. But then we know that led to the whole collapse of, but they get involved where the government's involved in the housing. But this is a mess.
It's on the verge. It's on the verge.
Yeah. Why would you let companies like BlackRock buy huge swaths of and buy up all the single detached properties? So we're going to turn to a landlord-tenant society. Are we going back in time? Is Trudeau going to have a moat around his headquarters with that crazy? You guys help me with her name again. Freeland.
Freeland, yeah.
Freeland, yeah.
I guess the king and queen will have a moat around, and maybe they start chopping people's heads off instead of just harassing the truckers. I remember seeing the horses up there stomping on the elderly. I mean, what's going on?
Well, now they're going after the grocery stores. So they're deflecting inflation and saying that the grocery stores are too profitable and essentially blaming them for people paying higher food costs. But he never raised a single comment against the pharmaceuticals when they were making billions upon billions of dollars, and the government was spending everybody's money to buy everything, to buy all those
Right. So
pharmaceuticals.
blame it on the butcher, the baker, the candlestick maker. This goes back to Diocletian, who tried this edict of maximum prices, and it was punishable by death. And then so the response would be, we just won't make anything anymore.
Mhm.
Right.
Everybody starves, because who's going to risk? If you start blaming the grocer's profit margins, nothing. Same with a restaurant owner. Usually the people that get in that industry have about a 90% chance of failing, because the government's after them on all their health permits and all the protocol for human resources and gender sensitivity training and ESG stuff. What is that? Societal and governance. I can't even keep up with the alphabet, the regulatory horde of conflicting and confusing and overlapping bureaucracies that just harass the the person that's just, we used to call them risk takers, like an entrepreneur. Now it's just someone trying to eke out a living.
Yeah.
And then meanwhile, they stuff a worthless paper currency down their throat as a way to drive them into wage slavery. Wait till you see the central bank digital currency that combines a digital ID tied to your bank account and your vaccine passport. So at that point, that's total slavery at that point.
Yeah, I think that they are obviously anti-business, anti-small business, I should say. You mentioned BlackRock. They obviously want the large conglomerates to own big conglomerates, so that, just like what we saw during the pandemic, where you had your Amazons making all the money, but you weren't allowed to go to a local grocery store. You could only go to a big box grocery store.
Right. So
that's clearly
they're picking the winners and they're picking the losers. That's what they're doing.
Exactly. But I think as far as central bank digital currencies are concerned, I think there's a different tact on how they're presenting it. Before it was, hey, listen, we've got a really convenient thing for you. How would you like to never worry about losing your driver's license again? Perfect. We're gonna have a digital ID, so you never have to worry about carrying around your social insurance number, right?
Yeah.
That's failed. So now we're going to crush everybody till they're so desperate that they want to accept whatever we have to give them. However, I'll tell you what I think is the biggest problem with central bank digital currencies.
Okay.
Is that people are going to, at some point here, they have to realize that they don't need the central bank, period. And if you don't need the central bank, then you can stop focusing on the central bank digital currency.
Mm-hmm.
And that's why we really do
So you
need
think
to push
there'll be,
end the Fed.
What will be the aha moment that leads to this enlightenment? Jerry, what do you predict?
Yeah, good question.
Well, I think what's begun, it's, first we're seeing
Here's
a
a clue.
de-dollarization. De-dollarization led to the alliance of the BRICS. So the BRICS are not on board with this World Economic Forum plan of central bank digital currency control 2.0 tyranny. And the tyranny fell on the people. Years ago, our bank accounts were locked by Chrystia Freeland. So this led to a lot of people to say, you know what? I'm taking my money out of the bank. I'm unbanking. To the point now we're seeing the big banks in the States, depositors fleeing for, uninsured depositors are fleeing to go somewhere else that's safer. The same shifts happening here in Canada, North America. People are unbanking, debanking. They don't want to be in this house of cards when things fall apart. And that goes the same. You heard about, I think everybody has heard about a central bank digital currency, and they don't like it. So they want to do something about it, preemptively roll out into precious metals, maybe hold some cash, but into another medium. And this trend has continued to the point where you're seeing people like JP Morgan, Jamie Dimon, just 2 weeks ago said, well, we're going to combat depositors fleeing. They're going to launch a depositor blockchain token. So no longer do we need to have deposits on the banks. will have a token that represents your deposits. So I don't know where this is going. It's definitely the highest degree of uncertainty pertaining to, but the banks are just definitely panicking. The central banks are panicking. Next week is your Federal Reserve rate hike. The report came out that the U.S. Fed is going to be losing almost 100 billion this year. And further to their financial report, the combined quarterly financial report that came out, that when they looked at the Fed's investments since before June 30th up to then, they had a market value, mark-to-market loss of over $1 trillion. So the Fed's losing money, not just because of their debt, the interest that they're paying on the debt, but they're now losing money on the investments that they make. There's a total failure. Central banks need to end or be totally revamped, going back to an honest money standard and a revamping of Bretton Woods, which is what the BRICS were talking about. They want to revamp Bretton Woods and bring back honest money to the system. Until that happens, I don't see people going back to the banking system and trusting it the way that they once did.
I think
so. I have to ask you, you're at Guildhall, your advertised price is lower than it is on the same planet somewhere else. That would make me feel good that I'm an honest businessman that have a product that's been around for 3,000 years plus, used as it's been used longer than that. It's an industrial use as well as a monetary metal. You can't lose. It's not like you're really buying it. You're just trading paper money for another form. All it is kind of like when you go on a trip. Sometimes you have to change your currency from US dollars to the sterling. It's just another. Is that the kilo?
This is the 100-ounce bar. It's about 6.7 pounds. We have this promo on for every 100 ounces that you buy from Guildhall, which is about $2,500. You're receiving a 1 ounce gold, 1 ounce silver bar free, which has been hugely popular this month for the month of September. So definitely get in touch with Guildhall. We'll hook you up.
Totally, yeah, and you're not too far from where I live. I am going to be in your neighborhood visiting the guys at West Red Lake Gold. They're in Central Ontario. Do you know where Red Lake is?
Yeah. I saw a report from them today, and yeah.
So I'll be there, and also the CEO of Kuya Silver. He talks about an area where one of your first hockey teams, it has the word King in it. Kings Lake, maybe, or Kings Mine. This is back when the NHL only had like 4 teams, but that's where his Kuya Silver is. So I'll be there for 3 of you guys. And we'll go knock on Justin's door, see if he'll.
Sounds great. We got a party ready to go.
Yeah, ready.
Yeah.
Do it.
A pickaxe party.
Yeah, pickaxe party.
There you go.
Well, let's do this again next Friday. It'll be broadcast probably by Monday, but you guys are the best. It's good thoughts too.
Great work.
Yeah, good. Thank you, Jeremy. It's always my honor. And we'll see everybody next week.
Yeah, sounds great. Thank you so much for joining us. We'll see you again soon.